Hello and welcome into the KE Report. Chad and Corey here, getting an update on West Red Lake Gold Mines. Traded on the TSX.V under the ticker WRLG and on the OTCQB under the ticker WRLGF. And we're joined today with the Vice President of Exploration, Will Robinson. And Will, great to have you back on the show to talk about some of the definition drilling you've been continuing to do at the Austin Zone. Some of this is coming in from various areas from South Austin, North Austin, to Main Austin, but you put out some press releases on September 10th and September 24th, just highlighting some wide intercepts of very high grade. On the 10th, you put out a headline number, 54 grams per ton gold over 4 meters and 23.73 grams per ton over 3.5 meters. You also put out one on the 24th, highlighting 49 grams per ton gold over 4.48 meters, about 4.5 meters there, and 18 grams per ton gold over 11 meters. So some good juicy hits, but just clarify the kind of drilling you're doing here, this definition drilling, and how that sets up these high confidence ounces to eventually turn over to the engineering team.
Yeah, absolutely. Good morning, Shad. Thanks for having me back. Yeah, so as you pointed out, great results that we've been putting out over the last month or so out of Austin and South Austin. We had a number of really impressive intercepts that we released out of Austin and McVeigh as well over the last month. But this is all, part of the definition program with the drilling that we're doing now. It's been our main focus, since October of last year when we started drilling underground again at Madsen. And really what that drilling is accomplishing is building up our high confidence inventory of what we call in situ inventory, or, almost to that stage of being determined mineable ounces within the deposit. So it's really stope level drilling, 6 to 8 meter spacing in these areas in order to bring it up to a level of confidence to where we can take the MRE model and refine it down to what we call our short-term model, which is essentially the model that then would be handed off to engineering and the tech services department at the mine site for doing their detailed engineering design. So wrapping stope shapes and making an actual mine plan around it.
So, Will, how do some of these results correlate to your expectations? What the company thought is in these areas? Any surprises? Any major takeaways?
Yeah, for sure. I mean, the way that we set about, planning this program for the definition drilling is we wanted to prioritize those areas of the deposit that were, the highest grade and the highest tonnage, and then we ranked them, according to that sort of priority system. And really, the results have been on par with expectations and even in some instances exceeding our expectations. I mean, when you start getting intercepts, like just in our most recent release on Tuesday there with 49 grams over 4.5 meters, I mean, that just kind of speaks to the upside that can exist even within the existing deposit. It's hard to represent very high grade intercepts within a deposit like Madsen, and the Red Lake District is pretty notorious for that. But just based on industry best practices, when you're doing a mineral resource estimate, there's a lot of capping that's involved with higher grade intercepts. And so you really need to constrain those results effectively just to have a conservative or, rigorous approach to the resource estimation. But then when we go in and do this tighter space drilling, oftentimes you can give, more weighting and still more confidence within those high grade hits. And that's exactly what our stope drilling or definition drilling program has been doing for us.
Well, and Will, just to that point, I think maybe some people watching will be maybe confused as far as, these aren't really trying to update the resource right now. They really aren't even in alignment with some of the grades in the resource because they're a lot higher. Like there's some little sections in here like that 1.74 meters of 74, almost 75 grams per ton gold, or there's a little piece that has just less than a meter with 95 grams per ton gold. You were telling us off mic that some of those are very hard to put into a resource estimate, but for a mining stope analysis, a little bit different ballgame. So maybe just expand that point so that people aren't confused as to whether these are going into resources or really for, the end goal here, which is to pull these out of the ground.
Yeah, absolutely. Yeah, this is really, if you were thinking of this being in a production scenario, which we're moving towards, for the second half of 2025, this is the stope level drilling, kind of the final pass of drilling, if you will, 6 to 8 meters, very tightly spaced, in order to give us that detail so that we can make refinement to the MRE model, bring it down to a level of accuracy with our short-term model that then can be handed off to engineering for design. Yeah, that's exactly right. And just to speak to sort of how the two models compare, oftentimes what we see with the with going from the MRE model to the short-term planning model is the shapes will tend to get a little bit smaller and more constrained, but they will oftentimes go up in grade. And so the actual mineral content going from MRE to short-term model stays fairly consistent within a couple of percent actually. But what we see is the shape gets tighter and grade goes up. And you can imagine how important that is to have that understanding when you go to do your engineering design, because having a tighter constrained model that's more accurate and better defined will allow you to minimize dilution, with any of the shapes that you put around those mineralized zones.
So there's been a lot of drilling, this definition drilling at this project and all of these Austin zones. How much more drilling is needed, Will, before you guys can put a pin in it and say, look, engineering team, take over, put together a mine plan for us?
Yeah, it's a good question. It's never really going to stop. When you're in a mining scenario, you always want to be doing the definition drilling ahead of any sort of mining, and having the opportunity for a better part of a year or a year and a half to actually build up an inventory of these high confidence ounces has been a huge advantage for us. And so, just for context, we kind of set ourselves a goal to have roughly 55,000 ounces of these high confidence in situ. Of this high confidence in situ inventory defined by the end of the year of 2024. And by mid-year, we're essentially at that mark. As it stands today, we're somewhere around 70,000 ounces within that high confidence category. And so, and we're probably going to drill another 18,000 meters before the end of the year, but we've drilled, 45 to 50,000 meters to date since getting back underground last October. And so I guess it just kind of speaks to, the performance of the team and how efficiently we've been drilling these areas off to be that far ahead of our mark. But we're not planning to slow, that effort down. Like the more, of these high confidence ounces that we can have in the bank and queued up for mine design to stay ahead of things, the better off we are.
Let's maybe back up and widen the scope a little bit, because I continue to have people send in comments or ask questions about why will West Red Lake gold mines be successful where pure gold wasn't. And I'll often share with them, well, first of all, they're going to be pulling from multiple stopes from multiple areas, not just from the McVeigh zone, which is where pure gold was focused on mostly, but at this Austin zone, North Austin, South Austin, you're going to have multiple areas you're pulling from, and you're currently doing a bulk sample program and some trial mining. Maybe just speak to that, because I think a lot of people have in their minds that you're just going to go back and do the exact same thing Pure Gold did. And so they're saying, why would the results be different? Speak to why this mine plan and these high confidence ounces set you up for a lot different experience.
Yeah, I mean, one of the game changers, an underground high grade mine like Madsen is really to have optionality. And so, our objective and the way that we want to set ourselves up for success, and one way at least, is to have, a number of different areas defined and ready and queued up for mining. So like you said, we won't just be confined to the area within the McVeigh zone, which was kind of the case with the previous operator. We're going to have access to, like you said, North Austin, South Austin, Austin. We have access to deeper portions of the deposit already. We're drilling and defining, high priority areas down to 12 level in the mine, where, previous operators really only got down to the 7 level and just a little bit in between the 7 and 9 level. And so, as you said, having a number of active headings queued up and ready to go, we think we need approximately 6 to 7 for the cut and fill mining method, which is a more selective mining method but much higher grade. This allows us to get closer to some of the remnant workings within the deposit, but then we'll be supplementing those areas with long hole stoping mining methods, which are larger tonnage, maybe slightly lower grade, but having the ability to take those larger tonnage areas, lower cost mining areas really too with the long hole, and supplement those with the cut and fill, and have enough of these areas accessible, allows us to kind of blend that material and just keep that 800 tons per day flowing smoothly to the mill on an ongoing basis. So yeah, optionality really is the key there.
So considering that optionality, then, when we see these type of drill results, high grade over some pretty good widths, but then even higher grade over some narrower widths, what moves the needle here? Are these the high grade areas? Should investors be focused on the higher grade aspect of these results?
Yeah, the high grade always gives you some cushion, right? And so if you can define and locate some of these areas in the mine where you have some of these higher grade portions of the resource that you can draw from, that helps to supplement, some of the other areas of the deposit that might be slightly lower grade. And we expect to be achieving, roughly 6 to 7 grams, maybe more, going to the mill on an ongoing basis. We have our PFS coming out here within the next month or so, which will really outline a lot of those details more effectively. But that's sort of what we're looking to accomplish. And so, yeah, as you said, the high grade portions of the deposit really give us an advantage and give you more of that optionality where if we need to draw from some of those higher grade areas, they can really, benefit the overall production profile. And then, looking further down the line, once you start bringing things into the equation like 8 zone, or potentially a Rowan down the road, those will really provide a nice step change. And again, just even more high grade supplemental feed, which can help keep your overall head grade sustainable.
Well, let's also share that in addition to all this definition drilling, your team is also getting busy at the surface with a surface drill and starting to do some more true exploration work. We had teased this a little bit last time where you were going to be going after a couple different targets. One of them, I believe, was the upper 8, which you believe could be a lookalike to the 8 zone. But the surface drill's been busy, so you're not just doing definition drilling, you're still expanding the resources.
Yeah, we are. We've been aggressively drilling, with the one drill on surface since August. And so we have some initial results for that first couple holes from that program, which will be on the upper 8 target that we're planning for release next week. So those should be out early next week for everyone's review. But no, it's been a really good program so far. What we really wanted to focus on with that surface drill for this year around Madsen was obviously high grade, but also new discoveries. And so we're testing a number of new targets and concepts that the team has put together. So we put a release out back in August that highlighted a number of those areas. But the first one is upper 8. We completed 3 holes at that area. We're now drilling at an area called MJ, which is 2 kilometers southwest of the main Madsen deposit. It's actually part of the wedge resource, but it's a part of the wedge that's hosted within the Russet Lake Ultramafic. So it's the same geologic environment as the 8 zone and the upper 8 zone as well. So we're looking for 8 zone analogs. If we can discover or start defining another zone of mineralization that's, on par with 8 zone as far as grade, it'll set us up really, really well, for future success. And so that's what we really wanted to focus on with this first kind of regional exploration program with the drilling at Madsen this year. And then we've got a couple of purely conceptual targets out to the northeast of the mine, 1 kilometer, then 2 kilometers to the northeast, testing this splay concept. And so I encourage the listeners to go back and review some of the information around those targets and how we put those together. So pretty exciting for sure. So next week, yes, the first 3 holes from upper 8 will be released with results. And just to kind of, give a little indication of success on that, we're actually adding a second drill as well here in the near term to focus on upper 8. And so we're pretty excited about that target and look forward to continuing to advance it.
Man, there's just so much drilling going on here. Well, I understand why investors can have a little bit of trouble understanding where all these areas are, but you do provide some good maps and cross sections within these news releases. Just to reiterate that upcoming PFS, pre-feasibility study, that's going to be a big point prover, I think, to the market to show economics around this asset. What are some of the keys that investors should be watching out for?
Yeah, I mean, really, it's just going to lay the roadmap, right, with the base case scenario for the restart. We expect the economics for that PFS study to be quite favorable. I mean, listeners need to remember that all the sunk capital is basically already incorporated, right? The mine is built, the mill is built, the tailings, all of that stuff is already created. So we don't have that huge initial CapEx sink to draw away from the economics of the project. So we do expect it to be quite favorable. I can't say much more on that, but we're very excited to get that out to market for everybody to review and really set the stage, for what's to come as we push towards getting back into production into the second half of 2025.
All right. Well, we'll wrap it up there, Will. Great update here on a lot of the definition drilling the team is doing, getting ready for those high confidence ounces to be able to put into the mine plan, but also still doing some true exploration work at surface with the surface drill. As some of those results come back out, let us know. We'll get you back on for an update, Will. And if people listening into this want to follow along with the news as it's released to the market, definitely click on the link below this interview. It takes you straight over to the company website, right to their news section, so you too can follow along. And Will, looking forward to our next conversation.
Hey, thanks so much, guys. Always a pleasure.